Hey guys, welcome back to another week of fundamental analysis. Let's start first with our October results. It is the first red month since I've started trading fundamentals, and quite a good month, to be honest, in terms of learning, understanding what we need to change. Not really the trades itself that were bad, to be upfront. They all had a bias, fundamental bias. They all were taken at valid support resistance zones. So look, let's go through the 4 trades we've taken in October. We're down 4R. Let's talk a little bit about the minds, the thought process, the mindset on all the trades. So first one that we took was a loss on gold. This was an added position. So I already had a position around here that was, or down here, that was in profit. This was an added position in a support zone. As you guys can see, we did get wicked out, but if we were to go on gold's chart for that day and go through that trade, you can see it did climb up further. So this was the initial position we were in. We were already up 4.5R. We got triggered out and it continued to rally up further. So look, that trade here, this trade here, we take on the chin. It was a valid trade. It was at a zone, a support zone. There was a nice wide enough stop loss and there was fundamental backing. So no problems whatsoever. I'm very happy with this trade. Second one, oil. Oil, we had, you guys can see we had this downtrend here, quite nice touches on this trend line. We had a break of that trend line. We had good supporting fundamental news. We had good jobs data, things like that. Also, I believe a bit of conflict in the Middle East, so affecting supply sort of issues with oil. We decided to get a long entry on this wick, rejection wick. We got stopped out. Good trade, good technical analysis, good fundamental analysis. It is what it is. We take it on the chin. Next one was US 30. Again, this is coming based off probably good jobs data. We had a 4-hour zone here, and we did take again, we had good news, and then we let it do its thing. The next day we had a doji here, decided to get in. We got wicked out. You guys can see it's a strong rally, a bull run for the US 30, for the Dow Jones. We had a look, although it was a weak zone, it was a valid zone. We took a loss there. It is what it is. Price is reaching this zone here right now, I think, and going further down. Yep, so it's passed down there. You can see it's still on its bear run. We've got this zone marked up. I would want to have good jobs data, good economic data before thinking about answering this. But yeah, again, another decent trade. That loss wasn't nothing crazy, valid loss. And then this was on oil again. I believe this was a breakout of this 4-hour resistance. Good rejection wick. Popped, stopped a little bit wider. You can see oil just fell down, tanked even more. So 4 losses in total. We're down. Look, this should have been a lot bigger. Our oil positions, the last oil position was smaller than usual. The US 30 position we got smaller as well. This risk was calculated. We decided to get a small position, not a full position. So I'm going to say it was a risk to reward of for US 30. No, we'll keep it at 1. So basically, guys, this is a 6th loss in oil, I believe. Let's have a look. Loss here, 1, 2, 3, 4, 5. So 5th loss in oil. We haven't ever won an oil trade. I'm taking oil off the trading list. We're doing well with gold, and I think if we can use US 30 as our counter sort of trade for gold, we're in a better position. So we're going to end October red. We're down 4R. This number here should be a lot larger. So I'm very lucky that it's, kept it at, at minimum. So that's October. We are in a gold trade right now, which I'll show you guys later. Let's just go through the news this week first. So 28th of October to the 3rd of November. COT reporting, we had, look at that big change in the yen. So yen's struggling again. You can see that big bias change in euro as well. S&P up 3%. US 30 down 3%. Oil down 5%. Look at that, guys. And that was the week we lost oil. Gold down 2%, silver down 3%. So in terms of what we're trading, US 30 and gold kind of a small change in the bigger scheme of things. So I'm not too fussed about this COT reporting. US 30, 3% down from a long bias. I'm not trading US 30 this week, and the fundamental economic news supports it. So you guys will see as we come. US data, we had a pretty big week last week. We had core PCE, GDP, consumer confidence, and NFP with jolts and shit. So core PCE, we had normal as expected. We had a revision to 0.2% from 0.1%. So positive news for PCE. And, as expected, I really wouldn't take this reading as much, to be honest. This reading, though, GDP advance, is quite substantial. We know that advanced GDP reading is the most potent, the most strong, I guess, that can shake the market, because it is the first reading of the quarter. You guys can see it was forecasted for 3%, 2.8%. There was a revision up from 2% to 3%, though. So it is good. That's kind of good news, but the fact is it was forecasted higher, lower than expected. Not a good reading for the GDP. So especially with rate cuts already already happening for the US economy, the fact that GDP isn't at least bare minimum break even to the forecasted is a sign that at least I'm reading it as more rate cuts coming, more probable rates cuts coming, just really trying to stimulate that economy. On the flip side, we do have consumer confidence this was the highest it's been in a little bit. I think we'll read into it more later on. But you can see 99.5 forecasted and current is 108.7. So I'm not going to ignore this. I'm going to try my best to keep it unbiased as possible. Since I am in a gold position right now, that sort of goes against consumer confidence. But this is definitely a great reading. That's probably the reason why my entry position is really small. My position size is very small, because I can understand that this reading here goes against what I read fundamentally. Now, the other three, you can see unemployment rate the same, so I'm not going to talk too much about that. NFP and jolts very, very low, revised down, lower than forecasted by, look at that, almost 100K, almost 500,000. So in terms of this as well, this reading might be a little bit skewed. There was the hurricanes that happened last week, which might have affected these numbers. So, again, just keeping everything in consideration, we have a smaller position size on gold, but there is enough fundamental news for me to trade gold long, essentially. So you can see what I'm trying to see with these, putting them together, is literally keep it nice and simple. Is this more green? Is this more red? And the difference between the two, there's the sentiment change there. And then if we can read further into the economic news, that's when we can sort of solidify our bias. AU, we'll keep it here. We don't have another week's reading, but we're going to keep AU here. You guys can see CPI was poorer than expected. However, keeping in mind the trend mean is the one that we're probably looking at the most, because it removes volatile price, and the trend mean was as expected. So not too crazy of a reading. This week's data. So let's go through it. I've highlighted some stuff here as well that I want to talk about that's not in this section here, but let's go through the big section here first. So CS composite, basically that composite is marking the change of selling price of single family homes in metropolitan areas of the US. So you guys can see it was better than forecasted. However, on reading the news piece, Brian Luke, who's the head of commodities for S&P, this is direct quotation where home price growth is beginning to show signs of strain, slowest annual gain since mortgage rates peaked in 2023. So you guys can see it's a positive reading there, but the sentiment that Mr. Luke is reading here doesn't reflect that. So it's really important to actually read the newsprints because things like this do happen. Consumer confidence, you guys can see, is way better than expected. Positive consumer confidence is the fastest pace since 2023 quarter one. It's also got revised up. However, if we go look at the advanced GDP quarter on quarter, you guys can see it's lower than expected at 2.8%. We did mention already JOLTS, job openings being poorer than expected, revised down. We got employment cost quarter to quarter. We've got average earnings. We've got NFP. So quarter on quarter was the weakest increase in employment cost. Employment cost was the weakest increase since second quarter of 2021. Employment cost, what it is, it does measure the wages, bonuses, and benefits. So essentially, how much our workers are getting paid. It has been the weakest increase since 2021, which isn't a good sign, essentially. Earnings, you guys can see earnings was better than expected, but NFP, that reading there was the one that struck to me the most, significantly lower. Again, I'm keeping in mind the hurricane. Now, these other newsprints, let's talk about it. So we got pending home sales. Look at that, guys. Huge increase. We had rate cuts. People could borrow more. And then we just saw a huge increase in month-to-month sales of pending homes. What's that? Triple the expected, the forecasted figure. So really good reading. Again, this is just showing signs of rate cuts actually happening. Doing its thing, essentially. So good sign for the economy, but again, I'm reading this as to be expected. We're cutting rates. People are using their loans now, and it's the start of it. Essentially, we're going to see that grow. PCE, not really too much to comment about. It's inflation sort of being held as expected. Chicago PMI, lower than expected. So again, showing some signs of a poor economy. We do know manufacturing is pretty poor. It's been poor for a long time, ISM manufacturing. It'll be interesting to see ISM services, which have been better than manufacturing, and that will be printed on next week. So that's something to keep in mind. Also, following the Aussie CPI, we had head economist Mr. Gareth Aird predicting rate cuts in 2025, and this is direct quote: "The process of normalizing the cash rates will be a story in 2025." So, upon reading just this data here, where you guys could expect, hey, look, CPI is coming down. We want to get rate cuts now. Again, next week is actually cash rates for the Aussie. So, just reading the numbers, you'd expect, hey, let's go cut rates on the next visit. However, upon reading this news articles, you can see this economist is thinking cash rates in early 2025, and then upon reading it further, it's because trimmed mean CPI, removing this one here, quarter to quarter, removing volatile prices. That's the one that sort of gains most attention, and that remains as expected. It was increased higher last reading as well. So a bit of inflation being quite sticky for Aussie just with this reading itself. Again, just a side note, just keeping in mind that rate cuts can change. So we can get earlier rate cuts dependent on the employment data. So if we get poor employment data, if we start to see struggle in the economy, more people getting on benefits, insurance benefits, more people, higher unemployment rates, that's when the government might, the Australian Reserve might cut rates quicker, essentially. So let's just go through the graphs. PCE, core PCE, as expected, it is higher than last month, but is as expected. I'm not going to comment too much on that. Advanced GDP, lower than forecasted, although not by much compared to, look at this one, big change here. Still significant because that's an important reading, essentially. So, you'd expect with rate cuts, hey, let's have it at least as forecasted, if not higher. But even after rate cuts, GDP isn't, at least advanced GDP isn't as expected, securing more rate cuts in the future, essentially. JOLTS, job openings going down. So, not good. Again, we had rate cuts. We expect these things to start getting better, especially compared to its last month, but it's been revised down. So, yeah. NFP, we forgot to change this or highlight this, but you can see big change in NFP. So we had a lot of employment last month, but they get revised down even last month, and then this month shot down to 12. So really bad readings from a employment standpoint, even with rate cuts. So at least what I'm reading is we need more rate cuts, essentially. Next week, we got big news. We got cash rates, we got services PMI, we got the election, and then we got rates for USD. So it'll be very interesting to see what happens next week. Let's see how it goes. My conclusion, my biases. So I've took oil off of this now. We're going to focus on these three pairs. I've been doing really well with gold this year. So reading gold, we have poor jobs data coming out this week or recently. We have potential gold longs again, trading with the trend as well. So basically, I'm just keeping in mind the technical side of things. I also put down, must be careful as sentiment, consumer confidence does show signs of a healthy outlook on the economy. So remember, guys, we got to keep in mind the concept of things being priced in, right? So we're not trading the news figures, we're trading what people think about the news figures, if you get what I mean. So what I mean by that is, let me try and elaborate, and I do apologize if it's not as clear, but essentially we get a reading and we get a reading that's from a number basis better than expected, better than forecasted, right? Which we might think, hey, that means, if it's better, let's say, for example, if employment data is better than forecasted, automatically we might think, hey, all right, that's bullish for the US dollar. However, you have to keep in mind the whole picture, the whole scenario is more so it's sentiment. So even if we have good jobs data, but the news readings, once you read it into it and you start reading what people think about how the economy is doing or how their employment numbers are doing, and if there's signs of it being, we're still at our lowest low, we're finding it hard to find people, things like that, the sentiment side of things, well, even though it's a good print, the sentiment side of things, people aren't seeing it as a good print, essentially. So we're trading the sentiment, we're trading what people think. Obviously, we're having our stop losses to mitigate risk, but we're trading what people think, because at the end of the day, it's what people think it's the emotional side of things that is going to affect someone putting a long position or putting a short position, right? Essentially, getting out of things or staying in things as well. So that's the sort of differentiation between sentiment and, the logical prints, the actual data. I'm always thinking about what others are thinking, essentially, and trying to capitalize on that. So gold, where we can get into longs right now, I'm happy to trade longs. It has to be small position sizes, and it has to be really nice technical data. US 30, we got poor jobs data. It's a very bullish market right now. So poor jobs data means I don't have a long bias. I'm not touching US 30. AU, although USD had bad economic news, we might be able to say, hey, let's trade AU to the long side. AU is currently, from a technical point of view, too choppy, too uncertain. I'm not going to touch that pair right now. So the only bias we have is gold. And you guys, let's go through our gold trade. So let's go through all the charts. So you guys can see we had a huge 4% increase in the dollar index. Now we're starting to chop. So if we were to just draw some things here, we got some areas of resistance, we got some areas of support, right? Starting to chop in there. We'll see what happens. We can, if we have good prints, we can go up. If we have bad prints, we can come down a bit, maybe test this and go back up. Who knows, right? Gold, our gold trade. Let's have a look. Let's see what the mindset was. So the mindset was we had poor economic data, which dropped it down. We have a zone here that was valid resistance. We thought it was going to turn to support, but we did put a nice large position size or a stop loss. We got in on this candle here. You guys can see it has come down through here. I would really like it to come down here. I think that's a safer, if we go on the 4 hour, that's a safe to support zone here. It gives us a nice little pullback, 2%, to potentially get a nice position size here to try and get up, right? But this position, if it was my full 1%, 200 USD, it would be 0.04%, 0.0 position into gold. I decided to lower the risk, so I literally put 0.01. I'm in the trade. I'm invested, a quarter R in. I'm watching this closely, but I'm not putting all the risk on the table, essentially. So I'm happy with that trade. Even if it does this, right? Even if it does this and just goes down here. Small position size, I was invested, I had good fundamental backing. I'm happy with this trade. I'm happy to take an L on this trade. Best case scenario though is if it comes down, shows signs of holding on this support levels here. If I can manage to get in, put my stop here, would be looking at a way better risk to reward. And just a great trade if it does go down there with fundamental backing, essentially. So good trade. I'm happy with this one. We'll stay into it right now. Keep it as is. US 30, you guys can see. Obviously, we know the story of 2024. Or at least the second half of 2024 has been very good for US 30, especially with rate cuts. This was a nice support zone here that you guys can see didn't really hold. If we go on the 4 hour, didn't really hold too well, which sort of chopping here right now. So this zone here is a nice support area. It can be extended here as well if you wanted to put it on the daily. We've marked that up. If we start getting good job prints and good economic prints, we could potentially look to long this area here, stop loss below there, and trail accordingly, right? Again, I'm not going against this trend. I'm definitely not going to short. We'll let US 30 do its thing. Last one, AU, as you guys can see, if we go on the 4 hourly, it's chopping on the 4 hour. It's going on a tear in terms of a bear trend. So I'm definitely, even with the bad US print, I'm not considering AU longs. The only area I might consider is probably here, to be honest. Here, if we get some good job, if we get cash rates being kept the same, no change to cash rates in AU, in Aussie, sorry. If we have, better economic reading for Aussie, whatever it might be, whether it's like some Westpac sentiment or whatever it might be, I might look to get in long here, just because this is a nice zone. You guys can see it's been holding heaps. Big rejection at this zone. We could potentially get in this zone here and start trailing up to the highs. But again, that's all theoretical. That's all waiting for the market to get on the price, seeing the fundamental data and moving accordingly. So that is the week, guys. Again, just to wrap it up, we're in a gold trade. We've got this marked up. We've got US elections next week, which is going to be very interesting to see what happens with gold. And yeah, it will be interesting to see how we wrap up the year. We've got November, and then we'll trade, the first 2 weeks of December, and we'll call it. That's Q4 done, and that's Q4 done, and that's pretty much consistency and wins for the year. So just to wrap up, we've got 2.5, 2.25, 4.5, 1.73, 3.75, -4 here. Again, we're going to take out these two pairs. So really, we're still green for the year. We're up. If we go here, 6. Yeah, we're essentially up 7 to 8%, risking 1%. By next year, if we can wrap up this whole year green, if we can get good November and December results, I'll be confident enough to increase that position size, probably to, let's keep it simple. Let's do 500 USD, 500 USD per trade. If we can average out, 2R per month, that's 1,000 USD per month, essentially. And if we were to go here, and again, this is all theoretical, right? But it's good to at least understand where our standing is. That's 1.5k Australian dollars every month, which is a nice little side gig, right? I'd be very happy to be consistently, earning that much every month, and then just, after the next quarter, just seeing where we want to take it. We can maybe even start getting up to, 1,000 USD per trade. Double that. That's a good sum of money for me every month. So I'll see you guys next month. Let's see how gold goes. Let's see how the US election goes, and you guys take care.